Welcome to The Explainer, where we break down the day's most important reads and sites. Let's jump right in.
All right. It is Wednesday, July 30th, 2025. Here's what we're covering in today's Reads and Sites. Now remember, for the full story, you've absolutely got to click the links in the materials we sent you. You really want to read these for yourself.
So, here's the plan. We're going to start with today's snapshot to get our bearings. Then dive deep into overnight market moves. And we'll finish up with 7 stories to watch. Let's get going.
First up, let's get oriented with our daily snapshot.
A quick check on the weather in Seoul. It's looking like another hot one. Mostly clear skies, with a high of 36 degrees Celsius and a low of 28.
Okay, turning to currencies. We're seeing the won gain a little ground. It's trading at 1,398 to the US dollar. Against the yen, it's at 935.51. For the euro, 1,603.67, and the Australian dollar is at 904.24.
All right, now for the main event, the overnight market moves. And the word of the day was definitely caution.
Yeah, investors on Wall Street were pretty much holding their breath. Everyone is waiting for the Fed's interest rate decision and, of course, a huge week of big tech earnings reports. So it's no surprise we saw a broad pullback. The Dow Jones Industrial Average fell 0.46%, the S&P 500 was down 0.30%, and the Nasdaq Composite also dipped 0.38%.
But here's where it gets really interesting. When you look inside big tech, it was a completely mixed picture. Alphabet just bucked the trend, climbing 1.56% on some good news from Waymo and a new AI feature. On the flip side, Meta dropped 2.46%. Investors are clearly getting worried about their massive spending. Microsoft was basically flat, just treading water before its earnings. Apple slipped 1.30%, weighed down by news of slowing shipments in China and a note from Barclays questioning its AI progress. And Amazon fell 0.76%, dealing with a lawsuit over counterfeit goods and also hit by a cautious outlook from UPS, which specifically seemed to drag on its shares. The semiconductor space was also a fascinating story. AMD continued its incredible run, jumping another 2.18% after hiking AI chip prices and getting upgrades from analysts. Other chip makers like Broadcom, Micron, and Qualcomm also had a good day, helping the overall Philadelphia Semiconductor Index inch up just a tiny bit by 0.05%. But then there's NVIDIA. It actually reversed course, ending the day down 0.70%. It seems like a mix of profit-taking combined with news that CEO Jensen Huang sold some stock just put a damper on the mood.
And wow, if you want to see a ripple effect in action, look no further than healthcare. Novo Nordisk absolutely plummeted, down a staggering 21.83%. The reason? They lowered their annual forecast for their blockbuster weight loss drug, Wegovy. That news sent shockwaves through the sector, dragging its biggest competitor, Eli Lilly, down 5.59% right along with it.
Looking at the broader economy, there were 2 other key moves. First, bond yields fell. The 10-year Treasury yield dropped down to 4.3290%. That's mainly because of some weak employment data, which has markets hoping the Fed might take a more dovish stance, maybe hinting at rate cuts. At the same time, crude oil prices soared, jumping 3.88% to $69.30 a barrel. And that move appears to be directly linked to the Trump administration increasing its pressure on Russia.
So, those market moves don't happen in a vacuum. They're all shaped by deeper trends. Let's look at 7 stories that really show us where things are headed.
First up, from VentureBeat. The argument here is that the web browser as we know it is evolving into an AI agent. So instead of you searching, the browser will understand your goal and just execute it. It's a fundamental change from us pulling information from the internet to the internet becoming a tool that actively gets things done for us. Second, The Economist is digging into AI's massive energy problem. The takeaway is that big tech is going beyond just buying green energy credits. They're now starting to invest directly in things like nuclear and geothermal power. They're essentially becoming their own energy companies just to feed their power-hungry data centers. Third, the information is pointing to the next huge market for batteries, robotics. And the key insight here is that the industry is shifting its focus. It's not just about energy density for cars anymore. It's about creating these super rugged, fast-charging, intelligent battery packs designed for the intense physical demands of humanoid robots in factories and warehouses. Story number 4, from the Financial Times, profiles what it calls the first AI native investment bank. I mean, this is wild. It's less about human analysts and more about AI agents that are constantly scanning global markets, identifying opportunities, and even structuring deals on their own, trying to operate at a speed humans just can't match.
Fifth, the Wall Street Journal points to a growing threat against Apple's massive valuation, and it's all about their services business. The article argues that regulatory pressure on App Store fees, plus the rise of AI agents that could just bypass apps, are creating the first real vulnerabilities in what's been an almost untouchable profit machine.
Our 6th story, also from the Wall Street Journal, is a masterclass in modern marketing. It breaks down how Ryan Reynolds and Gwyneth Paltrow helped a brand take a PR crisis and turn it into a huge win. They did it with self-aware humor, leaning into the controversy, and it completely disarmed critics while generating tons of positive buzz.
And finally, our 7th story is a fun one from the New York Times. It's a quiz that connects classic science fiction to the tech we use every day. Did Neuromancer predict the metaverse? Did Starship Troopers foresee AI-powered military gear? It's a really cool look at how much of our future was imagined decades ago.
This has been TRS for Wednesday, July 30th, 2025.
So, as we close out, here's something to think about. Today's story showed this incredible split. On one hand, AI is creating revolutionary new business models, AI banks, browsers that act as agents. But on the other, it demands this immense amount of power and resources. So as this tech gets integrated everywhere, the crucial question becomes, how do we balance its revolutionary potential with its very real and very high resource costs? Thanks for tuning in.